Good afternoon everyone and welcome to the Zenfinex monthly forecast videos for June. This is Connor from Zenfinex and today I'm going to be covering a crude oil forecast by running over recent supply and demand news events which has set the tone for where this market is heading. The demand news stems mainly around COVID-19 vaccines and the supply news coming from sanctions on Iranian oil exports. At the time of recording this video, oil is trading at around $68 per barrel. It was threatening to break and burst through key resistance at around $70 per barrel, but has since dropped off just a little bit. So there are plans to gradually increase production in July, and this was already factored into oil prices ahead of the OPEC meeting that we've had. In a normal situation, you may feel that higher production would lead to maybe a pause in oil prices. However, the expectations are that recovering summer travel demand and the reopening economies will easily accommodate the gradual increase that we see in production. And to be honest, it is widely believed that crude oil prices will continue to rise. We have higher gasoline demand during the summer season, which is the most important factor really at the moment, especially as many of the constraints currently in place could be eased significantly amid exit from the COVID-19 restrictions. So that essentially means that as long as we continue the successful vaccine rollout, we should see more and more unlocking of the global economies. The market will always be one step ahead of this though, which is something really important to bear in mind. And so this is what's being priced in at the moment, this high summer demand. It may be worth turning attention to Europe, where the vaccine rollout program is actually starting to pick up speed quite nicely. And the prospects there are actually looking a lot brighter than they did a few months ago, which really adds to this narrative as well. Now, something to note in the next week or so would be the developments in Iran. So Iran and global forces will enter a fifth round of talks on June the 10th, which is on Thursday, in Vienna. That could include Washington lifting economic sanctions on Iranian oil exports. While it is believed that a deal could be met, it is rumoured that the most difficult decisions still lie ahead. Analysts expect Iran to increase production of its crude oil by 500,000, and that's to a total of 1 million barrels per day once the sanctions have been lifted. So look out for the developments on the 10th of June on this one as well. Okay, so I'm on the chart now. I just wanted to leave some of the analysis and the drawings that I had on the chart from last time just to see where we was at and if we called it right really. And as you can see, we had these take profits in for May and we did actually hit them quite nicely. And I did mention about $70 per barrel being a really key resistance level, and that proved right as well as we touched this level and we've since started to dip off, and we actually cleaned nicely through this around the 68 level as well, which was the recent swing high. I said the floor of the market roughly potentially around $60 per barrel. We didn't really get anywhere near it, but to be fair, we did actually go down to around $62 per barrel, which actually tested a nice order block where you'd have had a nice clean run for a buy. But anyway, if we remove the drawings now and see where we're at, you can see that we've actually printed this new high from this previous high that was in March. And now when you actually think about where oil could go from here, well, you'd have to have a mark potentially. Oh, sorry, that's the wrong line. On this high that was printed in September of 2018. It's mad to think that we're actually speaking about this after the pandemic that we had and the real slump we had in oil, which you can see here, all the way down to pretty much zero minus actually. So if you're a buyer of oil and you have no interest in selling, which to be fair, when you look at the price action, it is respecting this 50-day moving average quite nicely. The 100-day moving average hasn't even come into play yet. We're looking at around $76.9, $77 as our next take profit level for oil. Where we can get this buying opportunity from would be, well, if we have a look at this high from March, it was actually broken. I'll mark that now as a break of structure. You can see that we've actually closed above. Well, where did that move initially come from? Where did that initial spike in the market come from? Well, I'd have this now. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. This area here as our daily order block level. So I'll mark that as our order block entry level. So what I'd like to see at some point is the market really move down into this level, which would be a nice correction on the RSI as well, and it would also be a test of the 100-day moving average, which hasn't come into play for a while. If we can get oil trading into around this order block at around $64 per barrel, then I think we can look for an entry level which would take us to our take profit level around 76.9. Fundamentally, I am bullish for oil, so I'm not really interested in selling. But if you were to sell the market and we go down onto the higher time frames, I'll get rid of this level. You can see that from this, so if we're looking to sell the market, you can see that potentially, if we zoom really right close into the price action, if we can get a close below either this low or this low, if we can get a close below there, then we can look to sell from an order block that's left behind, which could potentially be something like this, and we could sell down into the daily order block, which would be sitting at around 64 as we know. But more likely we'd be patient in this market at the moment, which is quite overextended, some would say, and we have this daily order block level here, which we could actually refine really nicely into such a smaller area. In order for price to be confirmed bearish, you can see that we have a trend line coming into play here. I don't really draw the trend lines on, but you can see we have this trend line coming into play here. In order for price to be confirmed as bearish, we'd have to see somehow a break below 64. Well, this order block here, which actually sits at between 64 and 61. I can't see that happening just yet, and I would really think that this would be a real discount level to buy from. Can price get there? Who knows? It may be too far for the price to drop, but we are looking at a 17.4 risk reward trade. If we go down onto, if I get rid of that, and then we go, okay, maybe price won't fall that far just yet, we can have a look to see where the market actually broke structure previously. So where did this break of structure come from? Here and here. You can see that we had two breaks. Well, you could actually argue that if price doesn't want to fall all the way down into this discount level, we could use this level here, previous support level, as a potential buying opportunity, because as you can see from this level we did get a run up and we broke these two highs from that, and even this one here. So there is buying demand here. So I think this is also a valid level, and this sits around the 66 level, which is a much more realistic opportunity to buy from. So what I'd wait for is prices to fall into this level, would actually represent potentially a test of the 200 simple moving average as well. But yeah, and then again, targeting really, first of all, the highs at 70, because we could get a double top at this level, who knows. And then secondly, aiming for our 76.9. And I'll just draw on the final price either into there and aiming for our profit, or price falls even further, which would be great, into our first take profit and then into our second take profit. So that's what I'm seeing for oil at the moment, guys. I hope everyone has enjoyed this video, and if you could please like and subscribe to our channel, it really helps boost the channel. That would be really appreciated as well. And as always, please drop your comments in the comments section. It's always great to hear other people's opinions on oil as well. Thank you all for listening. I'll see you all for the next video, which will be recorded tomorrow.